And now, officially, good morning, everybody, and welcome to the Market Watch Group. My favorite week, or my favorite day of the week, always Sundays, weekly market prep. We get to have coffee. We're 2 days post market, 1 day pre market. To me, that's the perfect time. Believe me, if I did my market posture on Saturdays, I probably would have scheduled these for Saturdays. You would have been like, oh, I guess. But no, Sundays are better. Saturdays are busier days. Sundays we're home, wake up in the morning, and do what? Well, section 5 of your trading plan dictates that we should be doing more than just our market posture, right? We should be doing all of our searching. We should do all of our watch list maintenance. We do that here sometimes when we have time. We should um, review all of our current trades. We should review our entire watch list. We do that. We should create a opportunity list. I think that's what I'm going to call it. My weekly opportunity list. That sounds good, right? Instead of short list or shopping list. Those are apparently confusing or sometimes anyway. The weekly opportunity. Some at any given time, it's not like there's just a random coincidence of whether a trade will show up, right? We see them developing. Some are closer than others. Those are the ones that we want to make sure we pay more attention to. So, right, what I want you thinking about, and we're about to move into the next iteration of our trading plans. This is going to be a big one. We're all going to be working on it together. Glenn and I are going to be popping in for some discussions. It's going to be amazing. Yeah, there you go. Um, we are investigators looking for trades. That's it. That's it. Follow the evidence. Press is here, but he's probably going to pop out and pop back in. All right, let's move forward. Weekly market prep. Disclaimers, as always. Remember, education and illustrative purposes only. We're not advisors. We're not brokers. We don't give guidance. We don't give recommendations. Yada yada yada. Today's agenda, we're going to review the market posture, one component at a time. We're going to take a look at the economic calendar, make sure we're aware of information coming our way, understanding, of course, what information is the market more sensitive to. We don't care about real estate numbers right now. We care about the Fed. We have an addiction to Fed crap. We're like, what is the Fed saying? What is the Fed doing? How is the Fed going to interpret this? So, okay. We'll potentially look around and see, do we have any weaknesses on our watch list that require searching? Right off the bat, I'll tell you, the reemergence is last year's big three. Technology, reemerging. Apple, Microsoft, chips, showing that strength. It's right-hand man, and now there's been a little bit of back and forth up there at the top. Communication services with both Google and Meta, i.e. the artist formerly known as Facebook. And we're looking to see, as Amazon tries to push a little bit, if consumer discretionary. But I would say there seems to be an ebb in financials and in industrials. So that's what we're thinking about. Markets are closed Wednesday. That's right. So remember, those of you, and I'll post this and I'll make an adjustment in our calendar so that when you try to go, if you try to go on Wednesday, it's going to tell you that it doesn't start until Thursday. The beauty of the Discord calendar system. But due to Juneteenth, there is no market. And so we are pushing our midweek check-in from Wednesday morning to Thursday morning, same time. I hope you'll be able to make it. We'll look at our watch lists. We'll look at our opportunity list. I'll change my slides. And then trading plan section of the week, section 1, we're starting over. Okay. Let's get into it. Here we go. Wells Fargo fires a dozen employees pretending to work. It's so funny. So I actually, way back when, almost a lifetime ago, when I was a licensed individual, I worked at Wells Fargo for 1 year. I started at Fidelity and then I moved to Wells Fargo's brokerage. It was a nightmare. It is a scammy place, right? We all know. Like it was funny. Even in the brokerage department I worked on, it's like everyone's trying to figure out like little scams to make their quotas, all their little quotas that they have. The bankers do it. Like they got like sued for it a while back, if you remember. And it's just like always they can't seem to rid themselves of this culture of their employees looking for ways to game their systems. I don't know what it is, but it's kind of funny. Okay, markets finished up a little iffy, right? Nasdaq barely made it back to positive territory. The Russell got just punched in the mouth, and the Dow and the S&P finished negative, but only slightly. Oh, okay. That culture usually starts at the top 100%. 100%. You're focused on outcome, not process, right? To me, it's the most. I mean, look, there's obviously a successful company, but then there's times where they just eventually it's going to bite them too hard. I mean, right? All outcome, no process, and all you get is people trying to game the system. That's not how we think here. Okay, let's talk about last week versus this week, what we're expecting. 5.5. So we had, for me, I was the same last week. I could live at a 5.5, just so you know. I would prefer we get back into like the sixes, obviously. If you remember what it was like trading when the market, you were assessing it higher, you're like, yeah, that was quite nice. And so if we just maintain a strong posture, okay, we can trade with that, right? And then hopefully we eventually see the conditions strengthen even still. But let's see what we think. Long-term trend is really so unlikely for me right now to have any adjustments. Let's just get this a little bit there. Okay. So I right now have assessed this at a 1.5 out of a 2, remember. I mean, it's really, at some point, would I maybe knock that up another quarter to 1.75? Sure. I don't know what it takes to get to a 2. I don't know that I've ever scored at a 2. And that just kind of has to do with my life philosophy. If you put yours at a 2, I'm not going to like fault you for it. My fear is always if you've scored at a 2 and then the market gets stronger, what do? There's nothing you can do. 1.5. That's a good number. It's strong. I mean, you can actually see that it was strong here. It's accelerated and it's maintaining the acceleration back here. I think we had scored it like a 0.75 or a 1. Now we've had it accelerate into a 1.5, and 1.5, I think, is right on point. Okay. Same thing here. And what I want to point out is that I feel like our philosophy, there are times where people make an argument, and I absolutely see it as a valid argument, where they say, hey, if you just for the first time looked at this and said, if you scored that, wouldn't you score that negative? But my score never went negative during that time. In fact, during this time, this would have been like end of March through early May. And you guys can look at your scores as well. So if you look at my score during that March to April time period, let's go back a little bit. Uh, short term never dropped below 1. It never dropped below 1 because once it got into this little territory right here where it obviously had broken the prior trend, we started scoring by accomplishment. Take away a quarter of a point for the lower low. Take away a quarter of a point, right? And that way, we're definitely reflecting the negativity that we're seeing in the market, but we're not like making this dramatic, like now I'm a minus 1.5 and then all of a sudden I'm back to a 1.5 again. That's a 3-point swing. I want you guys to think about how much that's going to whipsaw you in the way that you're thinking about your trades and how wrong that would have been to have done that. This would have been so wrong to do because the bullishness reemerged. And if you remember, I was like, hey, this looks and feels a lot like, and in fact, a little worse than what we saw back in October, November. So I'm like, let's be ready for a correction that never came. Like right through here was a pretty critical juncture where it's like this thing could have dropped, but it didn't. The sellers didn't come through. And bam, we're back. So if our score had gotten negative, that would have unduly biased you to the downside and it would have really screwed you up in this transition. I think this is important to illustrate, to really highlight why this process and the way we do it is going to be important in times like this. If it had gone worse, we would have adjusted down into a correction. We were ready. But the fact that it turned around. And so I just wanted to highlight that because I think it worked out very well that we did not, right, we didn't get panicky, is what I would call it. Let me know. Do you guys agree? Do you disagree? When you look at your scores, did you see something similar? I think that it's important that was an interesting little like, oh, it was a transition and then it recovered and here we are bullish again. And a lot of people are struggling with that, where I feel like, hey, we're back to bullish. Look around at what people are saying, and then think about it relative to what we look at, and go from there. But where does that put me for a score? I think we're perfect. We didn't adjust too much down, and then all of a sudden, when things got back, this trend right here, I would say that's definitely a 1.75. Maybe a 2. And you'll notice it didn't get up yet. I mean, we're still here. We haven't gotten to the top of this yet. I mean, I've definitely seen stronger than this in the short term. So I would say if this gets up to the top of that, I might say I'm going to give it the 2. But I think we're right in the right place. It's a good solid uptrend. It's not like this super strong, like way angled uptrend. It's just a nice, solid uptrend. SPY growth this year. See, press, I don't know. You'll see people who put out articles like that. And they talk about like it's isolated into certain components. In fact, I don't find myself concerned with it. That similar argument was made, if you remember, we talked about like breadth, right? Oh, it's narrow, meaning there's only a few companies that are producing it. But if you look at year to date, that's a lot broader than they make it seem. Growth this year, right? So this is the S&P year to date. You'll notice that Tesla and Intel have just gotten decimated, down 40% this year, down 28% this year. But yeah, Nvidia is off the charts, off the charts. Meta's got 42, Lily's got 50, Costco's got 30, Walmart's got 27, GE's got 53, Broadcom's got 55, Applied Materials 46, Micron 63, 65, I can read, Oracle 31, Amazon 21. So, right, so you've got some good, I mean, I would argue that this is a pretty good representation of breadth. Man, where's it weak? Real estate's weak. Industrials is a little iffy. Some of these aren't as good as others, but nah, I think if I think this is where you can go, I think, and get like, what do I see? I see it broad enough here over the last well, let's even look at 3 months. What do we see 3 months? You can see it's a little bit more iffy over the last 3 months, but the market's been a little bit more iffy over the last 3 months. When we look at the SPY over the last 3 months, you've got this little chunkaroo in here, right? It's like we were here 3 months ago. Where's 3 months ago? Right here. We were here 3 months ago. We dropped, we came back, and now we're just a little higher. Well, yeah, the fact that we're just a little higher is definitely being carried by Google, Apple. That's 100% true. And remember what we said last time. If the market's going to go, who's going to start it? It's not going to be Accenture and KLA Corp and American Express. That's not, those guys being bright green isn't going to pull everybody else with it. Microsoft, Nvidia, Apple, Google, Meta, Amazon, Tesla, GE, when those guys are bright green, what happens? Everybody starts to follow suit. Who's going to lead it? And who have we identified? Well, we're getting to that point next. So let me bear with it. So I don't know, press. I see it here without bias, without opinion, and I see it okay. I see the concern in the 3 month, but the 3 month concern is also the same for the market. We look at the market and we're like, yeah, the last 3 months, definitely not as strong as what we look at when we see year to date. Yeah. It's a funny thing because you see those stats a lot. Oh, it's only these 7. And it's like, well, at the beginning of a rally, who do you think's going to do it? I'm okay with that. The expectation, if you remember, it was 3. This is last summer. And if you weren't here, this is what happened. When the market was getting more bullish, it was 3 sectors. Technology, communication services, and consumer discretionary. And then all of a sudden we're like, oh, look at this. Now financials are there. And then we're like, oh, look at this. Industrials are there. And then at one point we're like, holy cow, now there's real estate. It's like everything is bullish. And that's breadth. That's broad. Boom, money's piling in. We love it. I mean, it's never going to last forever. There's going to be a correction. And then when you come out of the correction, we had that. Right? And then we had a little bit of a consolidation. As we come out of the consolidation, who's going to lead us next? That's what we're going to answer next. Follow the money. That's our thought process. But for now, 1.75 for me, same trend we've had. I'm going to be a 1.75 on this unless I decide. I've gone back and forth with it being a 2, so it could eventually say, you know what, I'm going to go ahead and sneak it up to a 2. But other than that, this is going to stay this way unless it breaks out of that trend. All right, volume. So my score will be unchanged. My volume score, what do we have? We have a negative day here. -1. Or we have a positive day here. That's a buyer's. So it's tied. And the fact that it's tied, I score it to a 0.25. Tie goes to the buyers. That's the scoring process, right? Now what? Bam. There we go. Nope, not that one. One more. Volume. And remember, it's not the color of the candle. The color of the candle is red. So we're not going to be like, oh, that's a red day. That's sellers. Remember why that's red. And if you're new, the color of the candle is dictated by the close of the day relative to the open of the day. That's what makes it colored. So that means that it opened at the top part of this little body and it closed at the bottom. If this was white, it would be the other way around. Like this candle here, it opened at the bottom, closed at the top, hence it being white. Opened at the top, closed at the bottom, hence it being red. But we know that it was a positive day because it closed here the day before. And then it opened, ran up, came back down, and closed a little lower than it opened. But it still did this. And that is what gives that a score. So now I am 1 to the sellers, 2 to the buyers. I'm going to raise my score 0.25. I'm going to give this a 0.5 now. A little bit more to the buyers. They earned it. Do you agree? Do you disagree? How are you scoring it on your end? I'm going to go mark mine. So I am now giving this a little bit of a bump, 0.5. Sandy says, yep. Yes, sir. Michael agrees. Love it. Love it. Some consensus. We have a quorum. Sector rotation. Nope. Let's not skip major market. Major market. Here we go. You'll notice our 9 months, right, is now right at the beginning of last year's correction that occurred in the September, October months. Right at the beginning, we had this correction. You can see the small caps got hit the worst. They were down 13 from, and we don't know. It could have, I don't remember exactly when it started. This is NASDAQ down 10. Yeah, it was a little worse than that. But so it's basically showing that after it shows us the correction and now the recovery. It includes this little dip, and where are we? Clearly the NASDAQ is the leader. Clearly. It's just, you can't question that, right? And anytime we have NASDAQ, i.e. technology, leading our market, we have a propensity to lean more bullish. We have the S&P here, nice and bullish. That's our watermark. We have the Dow ahead of the Russell, but both in lagging positions. So it's this little back and forth that we're watching as the last component, although we did have some interesting anomalies as we moved into the 66-day on the sector. We never really saw that as much here. Let's move forward to the next time frame, 133. You'll notice from 133, a little past the bottom, but mainly like now we're scoring just the recovery. Post last year's fall correction. So we're only now thinking about after that correction ended, how have things gone? Who's leading? Again, the NASDAQ, Russell in second, or S&P in the second position. Now you'll notice that from that time frame to now, the Russell actually as volatile as it's been. And it looks like a damn heart attack when you look at its chart compared to the other ones. Right? As volatile as it's been, it still ends up in a leading position relative to the Dow. So it's like there's this, and I don't necessarily think it's bullishness as much as a desire for bullishness, which is almost as good. It gets shook easier. That's why it's so volatile, right? It's like everyone wants to be able to get into small caps, but then the interest rate policy just keeps getting kicked down the road, and then they get shook a little bit, but then they're like, I don't know, I still want to do it. It's like you can feel that sentiment here, right? When you watch this, I think, when you break it down. But this looks a slightly more bullish than the first time frame that we looked at. Now we zoom in, we get to our scoring time frame, and there's been a little bit of a shift in our tug of war. Not in the primary. The primary race is certain still, right? Nasdaq in first, Russell in second. The tug of war is still down here in this, like, do I take it from a 0.5 to a 0.75? Or do I leave it at a 0.5 because it's just not quite certain what's going on yet? That's what I'm scoring right now. I'm absolutely a 0.5 due to the strength and stability seen by the Nasdaq in its leading position. That's locked in. The follow-up question is, are we more bullish than that because the Russell is showing movement into like that secondary position where we're like, yeah, people aren't really interested in large caps, which is more defensive. They're interested in small caps, which is much more aggressive. But we don't have that. We don't have that on the scoring time frame. The Dow has kind of popped back up. So when we start from this sideways, which is more relevant, we've said the market's been a little more sideways, and we include this little consolidative dip. 6.5% on the Russell, 6% on the Nasdaq, much less, only almost 4% there, 3% on the Dow. What do we have? Okay, so I'm going to go 0.5. And let's just go look at this, and you can kind of see it's more of the same even here. Nasdaq leading, S&P in second, and here's our tug of war between, right, that last little piece. They can't just decide if they're going to get past their concerns and get bullish, or if their concerns are going to remain and they're still going to have some defensiveness. That's that last little piece for me. So my score is going to remain a 0.5. What's it going to take to get to a 0.75? I need to be convinced that the Russell has moved convincingly into a that third position. It doesn't have to be. It has to be ahead of the S&P to get to a 1. It just has to be ahead of the Dow to get me into a 0.75. That's my thought right now. That's what would show me strengthening in that condition that I think would add to the underlying market. Okay, sector rotation. So last week we finally, for the first time, 2 weeks ago we got neutral. Last week we got positive. On all time frames? No, really just on the scoring time frame, convincingly. I don't know. That's a great question, Sandy. I'd probably like to see it on the 133 and the 66. Probably both. That's a great question. Phenomenal question. Sector rotation. What's our pace? Are we doing all right today? I feel like we are. Do you feel like I'm talking too much? I don't know. If you do, you can't say it. It's Father's Day. Okay. Looking at sectors, what do we find? Old familiars at the top. Technology leading, communication services in second. Financials still holding on, a little concerning as it drops below the S&P. Then we have industrials and materials industrials and utilities. Healthcare. I mean, it's kind of interesting, right? Because consumer discretionary still just lingering from this time frame. Energy's really starting to ebb or continuing to ebb, I guess I would say. So we like to see energy doing that. That takes inflationary pressures. If you remember, the last time the inflation ticked up, there was two main contributors: rent and energy. And so, with one of those contributors significantly declining, and if the other one stabilizes, and if they start to get a hint of interest rates coming down, that's what it's going to take to see rents go a little bit lower. So, I think from that standpoint, there's a very good chance we continue to see what we saw from the last week's inflationary reports. Okay, let's keep moving down to 133. Who's up top? Communication services and technology. And I mean, obviously, communication services is very technology adjacent. It's about using the technology, right? So it's Google, it's Meta, it's Netflix, etc. Who else is near? We've got industrials and financials near, but we also have utilities. And remember, utilities was that defensiveness that we saw. We come down, we see healthcare, we see materials, we see staples. A little bit of that defensiveness in staples still as well. And then we come down and you can see, yeah, discretionary really. I know we said we're looking at it. It's really going to rely on Amazon getting bullish. If Amazon doesn't get bullish, there's nothing else I think that's going to carry this thing. 66. Okay, so this is what got us last week, that 0.25. It was this surge of technology and diminishment. So utilities is still leading. But we can't be blind to the fact that even though it's leading because of this surge that occurred from April 15th to May 15th. It got that surge, and then it's just sort of stalled and is now dropping. So, and I don't see enough. You can see what I was looking for to give this another. I was looking for at least one more to join technology up here. I thought communication services had what it took, but you can see it just sort of slowed a little bit. Am I all the way over? I am. So I'm going to leave it. What I need to see to get this from a 0.25, which is where we are now, where I am now. I don't mean to speak for the collective. Where I am now, 0.25, for me to get this higher, I need this to, I'd like to see this come a little lower, and I'd like to see communication services join. If communication services joins technology, then we have what we need for an increased amount of breadth into this new rally. So press, this confirms what you flagged, but only on, I would say, this 66-day perspective, not a year-to-date perspective. I would say the year-to-date is bullish enough that once this it rights the ship, right? Once we see what we're looking for here, which is just a little more breadth, give us communication services, give us financials or industrials or consumer discretionary. Any one of those three. Give me three. I need more than just technology and technology adjacent with communication services. I need one other. And my score will jump a little bit further, and then it's like, hey, I'm fine. That's enough breadth. More will follow, right? But for me, score stays the same. Where is it? 0.25. Anyone see it different? Anyone more bullish? Anybody neutral still? Or negative? Let me know. Let's look at the VIX. Oh, the VIX. I feel like the VIX may actually balance our score. This is so interesting, the VIX. Still negative. Okay. Still negative. So the VIX signal on Friday did not end up triggering theoretically. What do I mean by that? This high, 12.68. For me to think, oh, we've now, rather than this just continuing to meander down like it seems like it might be, this day would have to actually exceed the high of this day. So it did during the day, but by the end of the day, this was 12.68, this was 12.66. So it actually finished 0.02 below. What does that mean? I'm not going to score it. I thought, oh, if it had finished at 12.69, that's a higher low. And I would give it a minus 0.25, but it didn't. What are your thoughts? This is one of those times where it's like we try to establish rules so that we can be consistent. But it's like we're within 0.02 of these numbers. And it's like, do you consider it? Do you not? So for scoring, here's where I'm going with this. I definitely want your comments, so please put them in. Here's where I'm going. Why are we comparing wick to body? Because the previous day represents the range, right? So this is the range of the previous day. And I want to know, have we taken it out? Right? Meaning, do I think that we have convincingly said we're bouncing this way now? And the only way, you'll remember, Press, one of the things that I'm going to look at for confirmation is, does this day surpass the high of this day? Not the body, but the high. And you'll notice that by using that, none of these days triggered. Right? If we just simply did, close to close, this would have been a higher low. But it wasn't a higher low, and we didn't want to consider that a higher low. It still kept coming down. So what I have to do to get confirmation is I need, and it's not intraday. If you were there, I think were you there Friday? Maybe you weren't there in the beginning part. I think we talked about what it would take for this to confirm is it needs to close above the previous day's range. So the wick represents the range, the body represents the close. So anytime we're looking for that level of confirmation, you will be comparing body to wick. Great question, by the way. And I hope the answer made sense. So here's what happened. I did take the hedge. It was close enough at or near the close. I'm pretty sure, someone remind me who was there on Friday. I'm pretty sure it was actually in the range. Why is my drawing tool? My drawing tool seems to have taken over my computer. Give me 1 second. Oh, this is insane. There we go. Sorry, I couldn't turn my drawing off. On Friday, this was like hovering a little higher, I think, and pull. Well, I guess I can go look. Yeah, you can even see it was like right at the end. So like for a lot of time, it ended up being underneath it. What does that mean to us? I'm going to leave my score the same. That's going to stay at a 1.25. But I did put a VIX head, or I did put an SPY hedge trade on. And I'm actually going to put that out for Monday. For if you missed it, this is what it looked like. I think I have it up here. It was a July 5/15 put, got it for $1.35. If you have bullish trades going into next week, and it looks like it's starting to accelerate, that trade is valid at anything less than $1.50. Anything less than $1.50. So that's how I'm going to put the alert out. If for some crazy reason the market gaps down and that's already below $1.50, you got to reevaluate. Okay, questions, comments, concerns. I'm going to leave my score the same. Therefore, I am a 5.75. I increased 0.25. Anyone else see it differently, better, worse? Let me know. I'm going to pull up the watch list and go through how things look. I'm going to get a pen handy so I can make a note of all the ones that for this week's opportunity list, we're calling it. I like that. I like the way it sounds. 5.25 for Steven. Anyone else want to let me know? Perfect. All right. When I go into my watch list, I have to what's going on? I have to shut down the chat for a minute, so I'll see you in a second. If you're saying anything, I'll be there. Apple. Well, wait a second. What's going on? Is this not the right chart? Oh, there it is. Yeah, Apple. Apple looks great. Apple looks very strong. It's a leader. It's flagging after strength. With AI moving in, and with their position in AI, we absolutely need to consider Apple as a viable leader. You can see how it's moved into position here. Last year, I kind of declared Microsoft prematurely, and I've reestablished Apple as the dominant market stock with NVIDIA. On the list for sure. AMD, it's hard to put it on the list. It's just not as strong as the others. Amazon, definitely on the list. AXP, I'm a little concerned with financials. There's only one financial. You'll see here in just a second. BAC, I think you could actually, Boeing. I think you could actually make an argument for a Boeing trade setting up here, and so I'm going to put it on the list. I think BAC, if there is a financial trade that I'm looking at, it's this one, and it looks like it's setting up. I think that financials will recover, and if financials move back into a, leadership position on the sector basis, someone like BAC is going to lead the way. So great, let's keep our eye out. And you can see it's stronger than Citigroup. Caterpillar looks iffy right now. I like Colgate Palmolive, but it's overextended. It's not a trade. CMG, it's not this week, but next. The 50-1 is coming up. Don't forget that we had a new one, AVGO. Look at their reaction to that split. Nope, their reaction to earnings. They smashed it on earnings. We should definitely put AVGO on our list, right? I'm going to add it. Broadcom on the list, but not a trade, just add it to the list. Oil looks terrible. Great. Costco, hoping for a trade. Didn't get much consolidation, still looks strong, waiting. Delta pulling back. Diamonds, no. Ooh, EQH, see, that could have sucked you in. I would imagine you would have had a great ability to exit on this big candle down. The signal should have been entering here. Then you would have had a great day, and then you would have given it all back, and you probably would have broken even or maybe a teeny loss. there's no reason you would have held the trade down to here. So, but at this point, it's not viable. FCX, no. Bitcoin, no. GE, no. Gold, no. Google, yes. Google, yes. Look where our yeses are so far. Apple, Amazon, Boeing, Bank of America, Google. And if people are like, oh, it's only those few, those are enormous behemoth companies. Those moving are like 30 little stocks, 60 little stocks moving. So when we say only, right? I don't know, you're like that's only the state of Alaska when talking about the size of states, you know? It's only Alaska and Texas. You're like, well, that's kind of most of it. Hims, I like it, but I'm going to put it on my list with Amazon in that consumer discretionary, but more wishful thinking that it would pull back and give us a trade. IWM, small caps are iffy and volatile, so be careful. There's better. I think there's better. Coca-Cola, yes. Yes. I'm putting all my consumer in one line. Discretionary, non-discretionary. So Amazon, HIMS, Coca-Cola, it's all together. It's all consumer right now for me. Meta, yes, with Google. Look what we did. We added Coca-Cola and Meta. Look at the size of these companies that we're saying we like. They're enormous. They're big. They're liquid. They can carry the market with them, not the other way around. MFC, I don't know. I'm iffy on that one. I think I'm just going to ride with Bank of America if I do anything in the financials. MMM looks okay. Kind of an industrial. I'm going to put that on my list. Morgan. I don't know. I kind of feel like I am going to put Morgan too. Like it held the 50. I think Morgan could come back from this. Microsoft, yes. Wishful thinking. It's overextended, but yes to Microsoft. Micron, yes. Netflix, yes. Where does Netflix go with Google and Meta? In communication services, add Micron to technology. Obviously, we're going to add NVIDIA to that group. So when anyone is like, it's only, I want you to just look at our list. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There's probably going to be a couple more. We're at 14. Apple, Microsoft, Micron, NVIDIA, Amazon, HIMS, Coca-Cola, Boeing, Morgan Stanley, Bank of America, Google, Meta, Netflix, 3M. I mean, come on, right? This is that seems like it's enough. Add PLTR to the technology mix. The Qs are strong. RTX, I like that. We'll put it with MMM. Got another one there. That's a nice strong one. Strength in SPY, strength in TSM. That is broad enough for me, my friends. Little bit of concern with the weird volatility in the dollar. Like, I just don't know what it's doing. I don't know. Maybe I was a little too tight putting like a line in the sand here. Maybe it should have been up here the whole time where it like never got through that, and now it's kind of flirting with it. So we'll see what that does. The VIX kind of still in that area that even though we escaped confirming the higher low on Friday, it could still just show up on Monday. So like we're not out of the woods. There's a lot of stuff setting up, but it could consolidate more, right? We would need to see this VIX just sort of whip around. BRT, that looks real iffy to me. We broke the 50. Now it looks like it's struggling. I don't know. I'm going to actually bounce that. Never traded it. Never really got anything great from it. I'm going to bounce Wells Fargo too, right? Like it's hard after we talk about how scammy they are. Walmart. Oh, look at Walmart. That looks tradable. That to me was a valid signal on Friday. I think it's tradable coming into Monday, depending on how things open. I'm putting it on my list. Walmart. So look at the retail or the consumer. I mean, Amazon, Hims, Coca-Cola, Walmart. Financials is lightest with just Bank of America. Let's see if this confirms. Materials iffy. Communication services strong and looking tradable. Energy looking weak. That's going to help inflation. Financials looking maybe-ish, iffy-ish. Same with industrials. Technology strong. Staples, consumer, kind of holding on. Utilities starting to ebb. Healthcare looks okay. Yeah. All right. So what's the bottom line? We're bullish. We ticked up a little bit, but we do seem to be in where we could have some type of a consolidation. There could be a VIX escalation. There could be a consolidation. We want to be ready for that. But there are a lot of things that are setting up. I love the look of our watch list right now. The opportunity list is strong. Can we look at Ford? Yes. Ford. We had Ford on our list before. We took it off. I mean, it looks real lackluster, right? Just kind of bouncing around under the 50-day moving average. Every time it gets to 50, it gets a little nervous. Like, I don't know. Can we do it? It's like, nope. Nope. Can we look at silver? Absolutely, we can look at silver. Okay, silver, it's holding, right? It's had its consolidation. It's dropped down, but it's holding at the 50. It did this last time. Looked exactly like this. So if you're looking at silver, I would 100% say viable. Viable. And tradable. I mean, you can see your stochastics has pinched and turned. Your candle has turned up. Yeah, I'd put a stop loss under the 50. Take $1 worth of risk. Last time this thing bounced 5 points. So could you risk $1 for this thing to get up to 31 and get 4 of it, 1 to 4? I don't know. Press, is that what you were thinking? DAL. DAL. Delta, yeah, a little more iffy, right? Like it's like just kind of floundering, tried to hold, and it's just sinking under the 50. I think at this point for me, gold and silver tend to correlate, but not always. They definitely have divergences. At this point, Delta's in a consolidation. So for me, it needs to do one of these, right? It's got to give me an up, down, up. It's got to break the old highs, get me a new one, and then it's got to hold above the old lows and above the consolidation. So that's where I am with Delta. No, I would agree. Like I said, I mean, certainly the dollar pressing up is going to put a little bit of stress on that, but you can see that there's not always gold and silver can be highly correlated a lot of times, but not always. Okay, let's talk about this week's trading plan. If you haven't popped in lately, please go to Discord and familiarize yourself with the new channels. I'm going to rearrange them a little bit in an order that I feel like makes sense, but then I'll definitely ask for feedback. We've consolidated all trading. We have Market Watch chat. That's just generic. We have trading discussions. All things discussions will be there. We have ask a question. That's just like you don't know, so put a question out there. We have suggestion box. It's not there yet, but it's coming. So just keep getting in there, familiarizing yourself with that. This week's trading plan, we're starting over from section 1. So Gray Lynn, Billy Ray, let's all dive into this together. I am going to have the sample trading plan. I evaluated our sample trading plan. It didn't meet requirements. So I'm going to buff up the sections that were prioritized and then I'm going to talk about it on, I don't remember what day. It may be Tuesday. I might have to have that ready by Tuesday. But we're going to have another trading plan discussion, especially because we're kicking off. So we're starting off with personal info. Oops, what the hell? What are you doing, Scott? Starting off with personal info, strengths and weaknesses, commitment and discipline statement, mission statement, vision statement. What does that look like? You're like, what does that look like? It looks like this. Strengths and weaknesses. Get me bullets. Give me sentences, one or two. Be honest. Be detailed. Be specific. Right? Really focus on your weaknesses, because in 7 weeks, when we get to the trading goals, the improvement mechanisms, we're going to come back to these and we're going to see, hey, how can we set a goal to make sure that I don't find myself ignoring information because I'm influenced by preferential bias? What am I going to do to make sure I don't rush a trade? What am I going to do to make sure I don't suffer from outcome bias and lose focus on the process? Right? Commitment and discipline, a paragraph. Mission statement, that one I would, if you've never done it, Google how to write a mission statement like it's for a business. Then think about your trading like a business, then write your mission statement. My trading mission is to become a consistent, disciplined, well-organized trader. Those are my values: consistency, discipline, organization. Who generates yearly profits with diverse trading strategies. Those are my objectives. Strategies are adaptable, relying on strict risk and money management techniques. My objective is to be flexible in my approach to the market, ensuring effectiveness in trading despite volatile, changing market conditions. I will be vigilant, using well thought out and defined rule-based systems at all times in order to eliminate emotions from my trading decisions. Mission statement. Oh, I spent some time on that back when I was a younger, smarter man. Vision statement. Here's your vision statement. When you get this right, when trading is right, it should change your life. You should retire sooner, retire more comfortably, right? If you can get 15 to 20% a year, and that's so easily achievable when the rest of the market's getting 8 to 10, that alone changes circumstances so substantially when you look at how much do I need to retire? What can I do with it when I do retire? Right? So let's work off that assumption that trading, when done right, is going to change your life. How? Give me a picture. What is it going to do? Right? What is the end? Retire earlier than expected. It's going to let me take vacations every year. It's going to let me create education accounts for. This is not me. Obviously, I don't have any grandchildren, so I just wrote this up. Make it colorful. Make it vivid. This is what you're working towards. Why is that important? It's important because when it gets hard, and it will get hard, you're going to need to go visit that vision statement and give yourself a little reminder. Why am I doing this? Because if I get it right, when I get it right, it's going to change so many things. That's my thought. That's what we're working on this week. Let's get some discussions going. I've enlisted Glenn, who happened to pop in with us today. He and I are going to be making extra efforts to pop in, stimulate conversations, answer questions. Right? So let's get into the Discord and really start to make that an offline, when there's no meeting, value add, where you're really starting to learn from each other. A lot of potential there. All right, I got to run. Happy Father's Day, everybody. It's great to see you. I will see you tomorrow morning for our market open at the usual time. But do remember, please, that Wednesday is a market holiday. So there will be no meetings on Wednesday. We will push our Wednesday morning meeting to Thursday morning. I will adjust the calendar. You can go check it on Discord if you would like to. Thanks, everyone. As always, happy trading.